Our Guelph housing market has remained in full force. But the big question is the recent interest rate hikes and the Russia-Ukraine conflict going to start to have an impact on our current market? In February, we saw a 68% increase in the amount of new houses that came to market. However, sales increased by 74%, which kept our inventory extremely low with only half a month's supply on the market. The average sale price for a detached house was $1,129,000, which is down slightly from January. However, we're still up 31% year over year, so I wouldn't read into the month over month change too much. Currently, 93% of the homes are selling to multiple offers, and we're seeing on average houses sell for 20% above list, which is insane. GTA buyers continue to flock to Guelph due to housing affordability as well as work from home flexibility and the commute no longer being a big issue. This is continuing to keep our market very, very strong. Despite the interest rate increase of 25 basis points, we just have way too much demand and not even close to enough supply for our market to cool down anytime soon. According to Benjamin Tal, Deputy Chief Economist at CIBC World Markets, unless something horrible happens like a cyber attack, the Russian-Ukraine conflict should continue to fuel inflation, which in turn will result in raising housing prices. However, with the increased inflation, we will likely see the Bank of Canada continue to try and raise interest rates to combat that inflation. For first-time buyers who are waiting, it's unlikely that we're going to see a price relief in 2022. We should see their market cool off to more of a regular increase by the end of the year. However, I don't think we're going to see a price adjustment or decrease in the near future. A lot of first-time buyers are having to borrow from the bank of mom and dad to get into the market. And if you are a parent who does have additional cash right now, you are better to give it to your children ahead of time, allowing them to get into the housing market, opposed to waiting for them to inherit the money. Sellers are continuing to take advantage of this market and cash out on the massive amounts of equity that they've gained over the last few years. A lot of our clients are moving to secondary properties, or they're choosing to move out to less expensive cities in either Northern Ontario or further Western Ontario. The other thing that we're experiencing right now is a lot of people selling in Southern Ontario and moving out east. Even though housing prices are skyrocketing out east, they're still a lot more affordable than they are here. I'm Brad Wild from Go Wild Real Estate, a group of professionals who are passionate about helping people grow their wealth through real estate.